Are you prepared for the looming crisis in the banking sector in Kenya, where we had that over 20 banks could actually collapse? And this is because of the proposed bill by the Central Bank of Kenya to increase the core capital of banks from 1 billion to 10 billion. Now, in the past, that has not been easy even for some banks, especially the smaller banks. Some of them have even struggled to just raise the 1 billion. And so you can imagine what that means to be asked to raise that to 10 billion. But in today's session, what I want us to answer today for ourselves is to ask, will our businesses, especially the small and medium enterprises, are they going to survive this looming crisis if it were to happen? Welcome to the SME classroom, where we learn one lesson at a time and look for ways of implementing so that on the ground our businesses can be better. Banks normally, as per Central Bank of Kenya, they're required to keep about 1 billion minimum with the Central Bank of Kenya to cushion them against any losses or unforeseen losses or things that may not work, so that they can be able to take care of the business and not collapse. And now this is being required to go to 10 billion and more, also to cushion their depositors, who are the people who bring in the money to the banks, and then banks lend money, that they lend that money at a price so that they're able to make their money. Now, if smaller banks close because of that requirement to increase the core capital to 10 billion, what does that mean for small businesses? First and foremost, we realize that now there's going to be a less pool of banks that are available to lend the bigger demand of businesses that is out there, because then the smaller banks actually been more accommodative on the small businesses more than the bigger banks. So them not being available now to take care of the SMEs, then that means everybody is scrambling for the same banks. And this is like, for example, the way we would say, if there was a ladder like here, and someone was just climbing and then somebody removes one or two of these, then that means even putting your foot to be able to go to the next level becomes very hard. So we likely find a situation where probably this is what will be left. So how does someone move from here to here? And so those are the kind of things that the impact that closure can have. So access to credit is likely to be a bit more difficult if this is to happen. Also, having fewer banks that can be able to give money out, or rather to lend, means the cost of that money is also going to increase. So cost of capital is also likely to go up. And the reason being, again, if the demand is high in the market and the supply is low, that is an economic factor in the market. When the demand is high and supply is low, normally prices go higher. So if already the market has been struggling a little bit, even in terms of what prices, what interest rates the banks can charge, then this is going to be even worse, because then we have fewer players playing in the market with more demand for the money in the market. So that's something also that needs to be looked at, even as you're thinking about how you're going to be positioning your business for success, even in the event that these kind of things could happen. One other thing that might happen is financial inclusion. And so you'll find that because of many more people, especially say in the remote areas or in the rural areas, those who have been looking for ways of getting, to get into the banking system, and there's been a lot of efforts trying to get more people to be banked. Now that is likely also to be water under the bridge, and the reason being, now many more people are likely, or many more businesses are likely to fall out of the categories for banking, because we are saying we have fewer banks, then there will be left fewer banks, and everybody needs to be within those banks. So that may be a hard call. And so for that, you might even find that we erode even the efforts that have been in the past of trying to have as many people banked in the country. And so with that, it's like, actually, if there was already a bridge, imagining there was a bridge from point A to B, so there was a bridge where people were coming in for financial inclusion, and then all of a sudden now this bridge has been broken. So getting here may become also another problem that we'll have to deal with for getting more people to be banked, or less people getting banked out there. Equally, it's possible that now if these banks are not available to lend and to help us run businesses, some of us would go for, quick monies, like for LPOs, lock purchase orders, and other monies that we require even for our day-to-day running of the business, like working capital. Now, if that money is not available for us to be able to run our businesses the way we've been doing it, the impact is that it could also disrupt our operations. And if our operations are also disrupted, it means that our businesses will not run as expected. So, it's like, imagine you have a car and you're running on it, and you're on the highway, you're driving, then along the way, there's no more fuel in the car. What happens in that case? It means you cannot move on, because you need fuel to be able to run the car. And so banks have been a source of fuel for most businesses in terms of giving, the funding and working capital, the loans and all that. So being not able to access those kind of facilities means our businesses are also going to be affected. So be on the lookout on that, because you need to start looking at where can you find fuel in case it just got finished in the middle of the road. In the country, we have so many investors who have come in to do business, and we also interact with them, because other than our business interactions with our final customers, we also deal with other businesses in form of suppliers and everything. So also investor confidence is likely to be an issue. Why? Because they are likely also to find this is a crisis. If that happens, either they close businesses or they decide that they're not coming into the country. It's also lowering our chances of succeeding and doing well in our businesses, because some of the people that we interact with in business or we trade with actually are people who are coming from other places, and they come into the country, and so we are able to find more opportunities to work together. So that in itself could be an issue. But again, I don't want to say this that there is to put fear on anyone. It's just to know that I believe that a lot of things are being put in place so that then the right thing and the right decisions can be made to ensure that not just us as businesses, but also for the people who work in those banks, because I believe there are many. If that was to be an issue, it would mean taking us back so many decades behind. Of all the efforts we've done for Kenya to be where it is right now, it would be really a very sad situation. So we pray and hope that this is going to be looked into, because it can have a very negative and profound effect, not just in our economy, but also at an individual level and our businesses too. So thanks. Let's continue watching and waiting to hear what happens and how this is going to take effect and how the shape of this is going to happen. I would love to hear from you on the comment section. Remember to like and subscribe so that you don't miss on the next session. Thank you.